Legendary investor Rick Rule just made a move that has the internet absolutely furious with him. After decades of holding physical silver, he sold 80% of it at $94 an ounce, right when everyone else is buying, right when the silver to the moon crowd is screaming it's going to $200, $300, maybe even $500. But here's what nobody's talking about, what he did with that money next. He didn't put it in bonds, he didn't buy real estate, he didn't even keep it in gold. He rotated 50% of those proceeds into something the market is completely ignoring right now. Something trading at valuations that discounts silver at $40 when we're sitting at $80 plus. And if he's right, the gains could be absolutely explosive. Welcome, welcome, welcome to Boring Currency Index. My dear friends, my wise friends, if you've lived through a few market cycles like I have, you understand that the real money isn't made following the crowd. Now, before we dive deep into Rick's shocking move, do me a small favor, would you? Hit that subscribe button right there below this video. Think of it as marking your spot in a book you don't want to lose. We're building a community of smart, experienced investors here, people who think for themselves. And I'm curious, where in the world are you watching this from today? Drop your city or country in the comments. I love seeing our global family grow. Now, let's get into why Rick Rule, a man who's been in this game for 55 years, just did something that has Twitter absolutely losing its mind. Rick Rule sat in his office looking at his silver holdings. For years, he had been buying physical silver, stacking it, storing it, waiting. He bought it when everyone hated it, when silver was at $20, then $25, then $30. People called him crazy. They said silver was a dead trade, a relic of the past, something that would never recover. But Rick didn't care what they said. He's 73 years old now, and he's seen this movie before. He's lived through the 1970s, when gold went from $35 to $850. He understands something most investors don't. The best time to buy is when everyone else is running away. So he bought silver, and he waited. And then something happened. The hate started to fade. Silver climbed to $50, then $60, then $70. By January 2025, it hit $94 an ounce. Suddenly, everyone loves silver. His Twitter feed exploded with people screaming about silver shortages, monetary debasement, the new era for precious metals. The same people who mocked him at $30 were now in love with silver at $94, and that's when Rick knew it was time to sell. Last week, he made his move. He sold 80% of his physical silver stack. The internet went absolutely ballistic. They called him a fool, a coward, someone who doesn't understand the silver story. How could he sell now? They screamed. Silver is going to $200, $300, maybe even $500. But Rick just smiled. He remembers what happened in 1975. Gold had risen from $35 to $200, a six-fold increase. People who hated gold at $35 suddenly loved it at $200. Then the Fed raised interest rates, and gold crashed to $100, cut in half. All those believers at $200 suddenly hated gold at $100. They got shaken out and missed the real move when gold soared to $850. Rick knows the game. He bought silver for one specific reason, because it was hated. Now that reason is gone. But here's the thing. Rick didn't just sell and walk away. He did something far more interesting. He rotated that capital into an opportunity the market is completely ignoring. An opportunity that could deliver explosive returns, even if silver just stays where it is. And what he bought next, that's where things get really interesting. Rick Rule pulled out his calculator and started running numbers that would make most investors' heads spin. But these numbers, they told a story the market was completely missing. Let me show you something, he said quietly. Most people think investing in mining stocks is simple math. Silver goes up 50%, stocks go up 50%. Gold doubles, mining stocks double. But that's not how it works. Not even close. Rick has spent 50 years analyzing these companies, and he's discovered something powerful, something that separates the amateurs from the professionals. It's called operational leverage. Here's how it works. Picture a silver mining company. They pull silver out of the ground for $25 per ounce. That's their all-in cost for labor, equipment, everything. Now they sell that silver for $50. That's a $25 profit margin per ounce. It's a decent business, right? But watch what happens when silver doubles to $100. Their costs don't double. They're still producing for roughly $25 to $30 per ounce. Now they're selling for $100. Their profit margin just went from $25 to $70 or $75. Their profits didn't just double, they tripled. This is the secret the crowd doesn't understand. And right now, it's happening in real time. Rick looked at the research reports from Wall Street. The analysts at the big banks, they're still using $40 to $45 silver in their models. Even though silver is trading much higher today, these analysts haven't updated their spreadsheets. They're valuing mining companies based on silver prices from last year. Rick explained, if you make the stuff for $25 and deliver it into a forecast at $45, but you're actually selling it for $80, it's impossible that you don't have an earnings surprise. Impossible. The math doesn't lie. These companies are about to report earnings that will shock Wall Street and blow past every estimate. When that happens, the stock prices will have to catch up. They have no choice. Rick started naming names. Pan American Silver, for example. They paid a very full price for a company called Mag Silver, a price that made sense at $30 silver. Now, with silver at 80 plus, their margins have exploded. Think about Wheaton Precious Metals, a streaming company that buys future production from miners. Wall Street is valuing them based on $2,200 gold, but gold is trading well above $2,700. The free cash flow estimates are massively understated. Rick sees something else too, something almost nobody is talking about: net present value calculations. When mining analysts value a company, they project future cash flows and discount them back to today's dollars. But those discount rates are based on old interest rate models. When interest rates fall, the discount rate should fall too, which would dramatically increase the present value of these companies. The market hasn't priced this in yet. The potential for upside is staggering. Thanks for watching, and don't forget to subscribe for more insights. But they're using old metal prices in those projections. If you're running a net present value model at $35 silver, and you rerun that same calculation at $70 or $80 silver, the difference is stark. The difference is dramatic. Some of these companies could be worth double or triple their current stock prices just from updating the assumptions. Rick wasn't done yet. He found something even more interesting: hidden assets. Assets that aren't even counted in the stock price. Pan American has two massive undeveloped silver deposits, one in Guatemala, one in Argentina. Each one holds 500 million ounces of high-grade silver. That's 1 billion ounces total, not factored into the net present value, not included in analyst models, ignored completely. Why? Political problems. The governments haven't approved development. Domestic politics got in the way. But Rick knows something about governments, especially broke governments. At $20 silver, these projects generated modest tax revenue, not worth the political fight. But at $80 silver, the tax revenue is measured in billions. Billions that Guatemala desperately needs. Billions that Argentina desperately needs. I don't believe either government can afford to leave these deposits unbuilt, Rick said. And when they finally approve them, when those billion ounces come onto Pan American's balance sheet, the stock price will explode. Rick is getting those assets for free. Completely free. It's like buying a house and discovering there's a second house hidden on the property. That's the opportunity. That's why he moved his money. And that's just the beginning. While everyone was screaming about silver on Twitter, Rick Rule was quietly doing the math. And what he discovered changed everything. See, most investors don't understand how mining companies actually work. They think it's simple. Silver goes up, silver stocks go up. But Rick has been analyzing mining companies for 50 years, and he knows something the crowd doesn't. He knows about leverage. Let me explain what Rick saw. Imagine a silver mining company, and they dig silver out of the ground for $20 per ounce. They sell it for $40. That's a $20 profit margin. Pretty good, right? Now, what happens when silver doubles to $80? Most people think, oh, the stock doubles too. Wrong, dead wrong. The company is still producing silver for $20, but now they're selling it for $80. That's a $60 profit margin. Their profits didn't double, they tripled, or even quadrupled. And here's the kicker. Wall Street analysts, the so-called experts, they're still valuing these companies based on $40 to $45 silver, not $80 silver, not even $70 silver. They're using outdated numbers, while silver is trading at nearly double what they're assuming. Rick saw this, and his eyes lit up. These companies are sitting on a gold mine, literally, and nobody's noticed yet. He started looking at specific names. Pan American Silver, trading like silver, is still at $30. Wheaton Precious Metals, still valued at $2,200 gold, when gold is over $2,700. These companies have another secret weapon too: undeveloped deposits. Rick found two massive silver deposits, one in Guatemala, one in Argentina, each holding 500 million ounces of high-grade silver. They're not even calculated in the company's value because of political issues. But here's what Rick knows. At $20 silver, governments could ignore these projects. The tax revenue wasn't worth the political headache. But at $80 silver, the revenue is measured in billions of dollars. Governments that are broke, Governments that desperately need money, they can't afford to leave that on the table. Rick believes there's a strong chance these deposits get approved, and when they do, the stock price could explode. He's getting these potential assets for free. Zero. They're not priced into the stock at all. It's like buying a house and discovering there's a second house on the property that nobody knew about. Rick also sees something else coming, something big in the copper industry. The copper mining industry needs to invest $250 billion just to maintain current production levels, but they don't have $250 billion. So how will they raise it? By selling silver streams, massive billion-dollar silver streams, to companies like Wheaton. And the market has no idea this is coming. Rick does. That's why he moved his money from physical silver into silver miners. The leverage is enormous. The upside is massive. And the risk? Well, that's where things get interesting. Rick Rule leaned back in his chair and delivered his final message, the one that matters most. I expect gold and silver to be much higher in 10 years, he said, but I guarantee volatility. This is what most people don't want to hear. They want the fairy tale, the story where precious metals go straight up forever. But Rick lived through the 1970s. He watched gold rise from $35 to $850. And he saw 3 brutal corrections along the way. Declines of 30%, 35%, even 50%. Each time, the weak hands got shaken out. Each time, the true believers turned into panic sellers. And each time, the smart money bought more. Rick expects the same thing in the next decade. We will experience at least one, probably 2, 30 to 35% declines in the gold price, he warned. When that happens, the people screaming silver to the moon today will be screaming, I knew it was a scam tomorrow. They'll sell at the bottom, just like they always do. But here's what Rick wants people to understand. The reason to own gold hasn't changed. The US dollar is losing purchasing power rapidly. The government debt is now $39 trillion and growing by $2 trillion every year. The off-balance sheet liabilities, Medicare, Medicaid, Social Security, another $120 trillion total obligations, $159 trillion total wealth of all Americans, $167 trillion. There's only an $8 trillion cushion, and it's shrinking by $4.5 trillion per year. The math is simple and terrifying. Rick sees only one way out, the same way they solved it in the 1980s, inflate the problem away, honor the nominal promises, but destroy the purchasing power. What would make me sell my gold? Rick asked. 3 things. 1, a balanced government budget. 2, a clear path to reducing the $159 trillion in total debt. 3, positive real interest rates. Real rates, not the fake CPI numbers. If inflation is really 8% to 10% per year, then a 4.2% treasury yield isn't paying you anything. You're losing 4% to 6% per year. For Rick to sell his gold, interest rates would need to hit 9.5% or higher. Imagine what that does to the economy. Mortgage rates at 11%, housing prices collapsing, and the government unable to service its debt. I believe we will solve these problems, Rick said, just not for 10 or 15 years. Until then, he's holding gold. He's playing silver miners for the leverage. And he's watching the oil and gas sector, especially Canadian energy companies. They're substantially cheaper than US companies, he explained, and the geology is just as good. The Western Canadian Sedimentary Basin has 75% of its best locations undrilled, while the Permian Basin in the US is 85% drilled out. The runway for growth is enormous, but it requires one thing, that Canadian politicians stop being idiots. Rick is betting they will. Not because they're smart, but because they're broke. And broke governments need tax revenue. His final advice? Limit your speculative stocks to the number of hours per month you plan to work on them. Most people own 50 stocks and spend 1 hour per month researching. Those people lose money, and they deserve to. If you want alpha, the big gains, you need to do the work, read the annual reports, study the balance sheets, understand the risks, or stick to the big producers, and sleep at night. Rick Rule has made his moves. He sold his silver, bought the miners, and he's waiting for the next crisis because he knows it's coming. The only question is, will you be ready? Closing? So there you have it, my friends. Rick Rule's playbook, laid bare. What do you think? Did he make the right move, or is he missing the biggest silver rally in history? Drop your thoughts in the comments below. And don't forget to subscribe, because this story is far from over.